Good morning, everyone. We'd like to welcome you to the Mesa City Council study session for May the 23rd. We are present with the exception of Mr. Freeman, who is traveling. But Mr. Freeman, are you with us on the telephone?
I am, Mayor. Thank you.
Thank you, Mr. Freeman. The first item on our agenda today, item 1A, is to hear a presentation and discuss the Arizona Municipal Water Users Association, I think affectionately referred to as AMWA, and an update on the drought contingency plan for our region. Gentlemen, welcome.
Mayor, Vice Mayor, members of the council, my name is Brian Draper, Mesa's Water Resources Advisor, and with me today is Warren Tenney, Executive Director of the Arizona Municipal Water Users Association. And I'll turn it over to Warren.
Thank you. Thank you, Mayor and council members. It's good to be with you this morning to talk about working together on water and the continuing effort to always keep our glasses full. So in Arizona, we have always recognized that we live in an arid state, and therefore you had better wring out every drop of water that you can. We do that because we know that water fuels our economy and our way of life. 50 years ago, back in 1969, the city leaders of Mesa, as well as 4 other valley cities, decided to establish AMWA. And they did this because they know that water does not flow according to political jurisdictions, and therefore it would be better to work together on water policy issues. Today, AMWA consists of 10 cities that span this valley from the Superstition Mountains to the White Tank Mountains. Together, the AMWA cities provide water to 3.5 million people. That's more than half of the state's population. We also provide water to businesses and industries that are key to the state's economy. We are linked together. If one of the valley cities are experiencing a water problem, it is perceived that the rest are having trouble also. And so AMWA provides a forum for us to work together. During our 50 years, AMWA has played an important role in finding solutions for many of our state's water challenges. A few of our accomplishments include a significant role in the passage of the 1980 Groundwater Management Act, as seen in the top photo. The Groundwater Management Act has provided a secure foundation for managing Arizona's water. We worked to have also an agreement with APS and our cities to provide reclaimed water to the to help cool the Palo Verde nuclear power plant. The AMWA helped also to develop the concept for the underground water storage legislation that allows cities to store water in aquifers and use it when it is needed in the future. And you can see that in the bottom photo. We helped to establish the Arizona Water Banking Authority, which puts Arizona's Colorado River water to use by storing it for a dry day. As seen in the photo on the left, AMWA City supported the modification to the Roosevelt Dam to expand the storage capacity of Roosevelt Lake. And most recently, AMWA worked with its members about how best to implement and successfully pass the Lower Basin Drought Contingency Plan in Arizona. DCP is a key example of how coordinating and working together on these issues give municipalities strength in number. The long road for completing DCP came to a conclusion this Monday when the 7 basin states and reclamation signed DCP into effect. One of AMWA's ongoing and most significant contributions has been to help to develop a water conservation ethic in the Phoenix metro area and in Arizona. For nearly 40 years, the state has mandated conservation requirements for municipalities. AMWA has brought together water conservation professionals from member cities and established a regional water conservation program. Through this collaborative effort, the cities have shared expertise and resources, launching programs and developing materials to help residents use water wisely. Each of our members has programs and resources tailored to best assist their residents and businesses to use water efficiently. Today, AMWA cities are recognized leaders in water conservation across this country. The benefit of these efforts is found right here, in which the city of Mesa's annual water demand is basically the same today as it was 20 years ago, even though your population has increased by 150,000 during that same time period. The water conservation ethic that we have here is how we have avoided needing to impose water restrictions during this time of prolonged drought. We want to increase awareness about these conservation programs so that the public knows what they can do as they hear more and more about drought, shortage, DCP, and climate change. Today, as we face shortages on the Colorado River and deal with other water supply issues, cooperation among municipalities is all the more critical. Through facilitating discussions about water among the cities, we are able to find and agree upon solutions. We then advocate on behalf of our members. Our being a forum about water for the cities occurs on many levels. The AMWA Board of Directors is comprised of the mayor or council member from each of our member cities. We are fortunate to have Councilmember Thompson serving on the AMWA board. We do a lot of our work with the water resources advisors and conservation specialists from each of our cities because they are the troops on the ground dealing every day with water. As issues are identified and positions developed, we also work with our management board, which is made up of our water utility directors or deputy city managers from each of our cities. As we collaborate and agree on issues, AMWA then advocates for our members, as we work with the Arizona Department of Water Resources, the CAP, and with SRP. Our most important advocacy effort is to speak with one active voice at the legislature. What happens in one part of the state on water policy can have a ripple effect throughout the state. A key guiding principle for us is, does the legislation strengthen the Groundwater Management Act and the assured water supply that has provided such a good foundation for us? AMWA will continue to shine a bright light on what Mesa and our 9 other member cities do day in and day out to provide water. The AMWA cities collectively employ more than 2,500 professionals to ensure that water is delivered every day of the year to homes, businesses, and industries. Because we provide the water to small businesses and to large industries, they are able to be the engine that drives our state's $320 billion GDP. What binds the AMWA cities together is our awareness that we must continually be planning and investing in our water resources and infrastructure. Because of this, we can all share the message that a shortage on the Colorado River does not mean a shortage at our taps. We are prepared and will continue to prepare for shortages. AMWA is proud of what we have contributed to this valley's economic success and our way of life in the last 50 years. Looking forward, AMWA is committed to continue to collaborate with Mesa and our other members to protect Arizona's water resources and to advocate for the wise management of those resources for the benefit of this valley and for all of Arizona. Thank you for taking the time this morning to let me share a little bit about AMWA. Thank you.
Thank you. Appreciate the presentation. Council, any questions or comments on this? Jen.
I do have a couple of questions that I've been meaning to ask. Do you know what % of Mesa's water supply is dependent on CAP?
Mayor, Councilmember Duff. Right now, demand, it's about 50% of our demand is supplied from the CAP canal. And then, of course, 40 to 45 is SRP, and the remainder is groundwater.
Okay, all right. And looking at the DCP plan, it's anticipated because of our wonderful year that we're having, that we won't have to enact the steps within the next year. But in the event that we need to, maybe next year or the next year, whenever that is, because we're very close to that, what are those initial cuts? I understand there's aggressive cuts in agriculture that'll affect the southern part of our state.
Yeah.
Is that correct?
Sure.
Mayor, Councilmember Duff, the way DCP is structured, as you implied, ag does take the first hit when there are cuts, and it's based on a priority system. So right now, the ag water that they're receiving is a low priority water. And so as you go down through the higher priorities, they take the first hit. Mesa will, even though we have higher priority water, some of our non-irrigated ag water, non-Indian ag water, will actually take a little bit of a hit, but through DCP, that's mitigated. And so we wouldn't see any severe cuts like that until we start getting deeper into the cuts, like a Tier 3 shortage on the Colorado River. So DCP is set up to protect us from hitting Tier 3, and we anticipate at some point we might hit a Tier 1 or a Tier 2A, but to the municipalities, because of that higher priority water, you won't see that impact, as Warren implied, at the taps.
I do appreciate the position that we are in Mesa, and it seems quite stable in the negotiation that we have with all the municipalities and their uses. But I do have a concern about agriculture, which I know is outside the purview of our responsibilities, but I was just putting that out there. And I'll have more discussions about that, just as far as the agriculture and what that means to our state and food supply. But I'll leave it at that, since we're not covering that today. Thank you.
Thank you.
Thank you. I know we appreciate Mr. Thompson's service on AMWA. Thank you, Kevin. You represent us well there. Mr. Freeman, you have anything you'd like to say on this topic?
I don't, Mayor. Thank you, though.
Thank you. Thank you, gentlemen.
Thank you so much.
The next item on our agenda is item 1B. That's to hear a presentation and discuss the Series 2019 bond sales. Welcome our CFO, Mike Kennington, and our bond counsel, Larry Given. Did I get that title correctly?
He's our financial advisor.
Financial advisor, thank you.
That would take being a lawyer, Mr. Mayor.
Yeah, I'm sorry. I shouldn't
just couldn't
have
qualify.
casted aspersions like that. I apologize.
Good morning, Mayor, council members. My name is, as the mayor said, my name is Mike Kennington. I'm the chief financial officer. And with me is Larry Given, a managing director at Hilltop Securities, also the city's financial advisor. Today, we'd like to share with you some great information on what occurred this year during our bond sales. As council may remember, we went out to the market with 4 bond issuances, 1 GO, 1 new money GO, 1 new money utility revenue bonds, and 2 refunding bonds. At the beginning of the process, what we normally do is request ratings from rating agencies. In this case, we requested ratings from both S&P and Moody's. During the process, S&P and Moody's, conduct a call, review our financial reports, look at the financial documents, ask many follow-up questions, and also look at these common themes that I've listed on this slide, and look at and analyze the city of Mesa given those parameters. This year, the good news that we've shared with council before is that we received an upgrade from S&P's on our GO bonds. As you can see in the diagram on the right of the slide, they moved our rating up for GOs to AA from AA-. They maintained our AA- for the utility revenue. Moody's maintained our AA2 for both GO and utility. And this is, I just want to put this in perspective, and this is the first time we've experienced an upgrade in my time here at the city over 7 years. So it's pretty significant for us to get that upgrade. And at this moment, I want to pause and ask Larry to share his experience with the city of Mesa and these upgrades.
Mr. Mayor, members of the council, I just want you to recognize that this upgrade is part of a long-term continuing effort by city staff, started at the top with Chris Brady and with Mike and with Irma and Candace and Ryan and so forth, and all the utility people as well, who took off before my presentation, and I couldn't believe it. They wouldn't be interested, but this is no travelogue when we talk to these people and make presentations to them for rating purposes. There's a lot of groundwork that goes into this year-round. And I know the city manager has made this a priority, and we're not stopping here. At least that is the direction we've had from the city manager, to continue to improve the ratings. And to comment on Mike's presentation, this is the highest from Standard & Poor's Corporation. This is the highest GeoBond rating the city has had in the last 30 years. And same goes for the Moody's ratings. It's just that we've had them for a longer time period now. So I just want to say congratulations to staff. It was time well spent. And I wanted the council to recognize all the efforts that go into this.
Thank you, Larry. What does that mean for us in the market? We've talked before about better ratings lead to lower interest costs, but one of the first things we see is the increased demand. So a higher rating, the upgrade helps increase the demand for City of Mesa bonds. In this slide, I'm showing what we experienced in the market when we went to price the bonds. And when I put the 2.3x, what that means is the City of Mesa goes out and offers to sell a certain amount of bonds. The 2.3 represents 2.3 times the number of bonds we received in offers from investors to buy City of Mesa bonds. So when we say 2.3x, that means more than twice or 2 times oversubscribed. It was the demand that investors had for City of Mesa bonds. And you can see on the slide, every one of the issuances we had were over 100% orders we received from investors. What does that mean? That helps us receive and realize a lower interest cost. As the demand is greater, it pushes down the interest costs we're able to realize in our bonds. You can see here in the GEO bonds, in our new money GEO bonds, we realize a 2.7% interest cost, which, and for the utility revenue bonds, we realize a 3.3 interest cost. On the slide, you can see the savings that we realized from where we forecasted we would be versus what we realized. Those were for the new money bonds. For the refunding bonds, we also experienced significant savings. As you may remember, when we came to council in March, we estimated, given the current yields, that we would realize about $12 million in savings. We were able to generate almost $17 million of savings for those 2 refunding issuances. So that'll go directly to the bottom line of the utility, the enterprise fund for savings, a one-time savings, and is very significant from the $12 million that we estimated, the $17 million. So that was the update I wanted to give, the facts I wanted to give to council on what we experienced. I wanted to also allow Larry to also opine on his thoughts on how it went this year during our bond sales.
Well, Mr. Mayor, members of council, I thought that the sale of the bonds went really well. As Mike indicated, there was a lot of demand for your bonds. And that had to do with not only the credit rating the city achieved, but also the fact that the city seems to have an uncanny ability to hit the market, even though these bond sales are planned 3-4 months in advance. They've had the uncanny ability to hit the market at the right time. And I don't know if that means that we ought to be speculating in fixed income securities whenever Mesa schedules a bond issue. But it has worked out the last 5-6 years, and it's been surprising. And this year it happened to work out that there were some, you might have heard about some trade problems between the United States and China. And there was an announcement on Monday of that week, and it drove investors out of risky investments into the fixed income market. And that all worked for the benefit of the city. So that's part of the story. As far as generating the kind of demand you did for these bonds, you have to understand that underwriters go out before the sale date or the pricing date for the bonds to pre-market the bonds to various investors. In this case, primarily institutional investors like bond funds, big insurance companies, and so forth. And so when they come in to price the bonds the day of the sale, they have already built up, if you will, a book of potential orders and answer questions, because you have to understand also that the bond funds and the major institutions all have their own analysts. They don't depend solely on Moody's and S&P for the credit rating. They bring their own people in and look at this. So this is not just an endorsement by Moody's and S&P about the improving financial situation or their recognition of the improving financial situation with the city of Mesa, but it's also an endorsement from all these analysts that work at these major bond funds and major institutions. And in any event, they create a book of business, they come in, they price the bonds, and then you take actual orders where someone putting in the order is responsible for actually buying the bond. And what the coverage table that Mike showed you means is that there were way more orders after the pre-marketing period, after the credit rating and credit evaluation process at these institutions. There were way more orders than you had bonds available. And what happens then is we reduce yields. And just for an anecdote, on the 3 utility issues, the 2 refundings and the 1 new money that was ended up being about $100 million. The combined true interest cost, or TIC, of those 3 issues was 2.97%. So you can see where the city benefited greatly, not only from this entire process and the bond market work in your favor, but to be able to go out and borrow long-term at 3%, that's very substantial, and that's why we had the kind of savings that you experienced on the refunding issues. And with that, I'm open for any questions.
So, Mayor and Council, as Larry's been here longer than I have, I've been here longer than Mike has, but this is a milestone for the city of Mesa financially, where this is the one time of the year where we really do get evaluated by outside third parties, by experts in the field who do this weekly, evaluating municipalities, evaluating utilities. We've been working hard to ask for the upgrade. When we started the presentation, I made it known to the agencies that that's what we were expecting, because we felt at this point in time, over the past decade, that Mesa financially was at the strongest point that it had been in a decade. And so we made that pitch that there was no reason to continue the existing rating that we'd had for all this time, because we felt in a financial position and our story was such that we were in a better position today. And I think they heard that. And you need to understand too, that sometimes our discussions seem to try to bifurcate these. But these analysts are having discussions, and we're talking about the general fund and the utility fund. While they get rated separately, I can assure you in our conversations, the analysts are all sitting on the same conference call talking about both. And the health and the financial position of both are integrated in the discussion. In that discussion, around that table, you have myself, you have Larry and his associate, and you have our financial team, you have our budget team, but you also have our infrastructure team. They sit there and they have to answer questions to the analysts too, about our capacities, about our age, about our plans for maintaining our infrastructure. So it's a very comprehensive, and that's just the meeting we have on the phone call. There are a tremendous amount of hours that are spent outside of that. But I just want to thank all those who have participated, because for the city of Mesa, however this might get spun, as the city manager, I'll tell you, this, as Larry just said, this is the best rating we've had in how long?
32 years.
32 years. It needs to be recognized that right now, City of Mesa is probably at the strongest financial position as it's been in a very, very long time. And so I just want to say thank you to all those who helped make this happen, to the mayor and council for trusting us to move forward. You can see the results at the end of the day. The ratepayers of our utilities and the taxpayers of Mesa are going to benefit with historically low interest rates on capital. So I think that is very helpful. And we had to anticipate a certain rate. We didn't anticipate below 3% in our rates. So the assumption that we have in our budget is higher than what the results are. So there are going to be savings built into the forecast already. So obviously that is good news for the city of Mesa. Thank you.
Thank you very much. Council, questions for these gentlemen or comments? Jeremy.
Of questions on these reports, Mike. So one of the things that I believe it was S&P pointed out, they said the combined utilities 5-year CIP is sizable. In our view, it totals about $1.1 billion, of which 66% is anticipated to be funded with additional debt, which is roughly $726 million. So is that your opinion as to how much will be going to the voters to ask for a new bond debt on the 2020 ballot?
Mayor, Councilmember Whitaker, I think this is the similar discussion you had last week or this week on Monday about the CIP. They looked at our CIP schedules as well. We explained to them as well that this was kind of a wish list for our departments and that we'll continue to work that list as time goes on.
So it's the same concept. It's not necessarily a list of CIP projects that you deem necessary, but more so it's just they just view that as a wish list and they understand that you're going to change that in the future.
Yeah, that's correct.
Okay. The other question I had on the report was, this is a quote directly from the report, the ratings further reflect the combined utilities' relative sizable historical transfers to the general fund. This is obviously coming from the utility report, which we believe could pressure the system's affordability and market position over time. Is it fair to say that the credit rating agencies are requesting that there be a formal policy or a cap that transfers the amount of money from the enterprise, from the utilities over to the general fund?
Mayor, Councilmember Whitaker, they'll always find opportunities to improve. They would like policies on everything. And so they would like formal policies on many things. That would probably be one they would like a formal policy on as well.
Mayor and Council, that's a great question. And it is something, Councilor Whitaker, that we have indicated to them that as a city, we are working to establish that. And we mentioned to them that the policy today that we've adopted in the last 3 or 4 years is to maintain that transfer, not to increase by more than inflation. So they understand that, and that's been the stated policy. Now, whether or not taking that, and they've also recognizing it also being servicing the public safety component, but I think they would be supportive of us, as we have as a practice now, adopting a clear policy that, that transfer, the specific transfer, the public safety transfer would be limited to a certain percentage. Right now, I think we limit it to CPI.
Yeah, and that's something else that I wanted clarification. We heard a few weeks ago that the transfer from the enterprise fund to the general fund is in fact capped at CPI, but the numbers that I'm looking at, it doesn't show that. I mean, out of the last 5 years, I think only 1 year were we able to maintain capping that transfer at CPI. So I guess I'm a little confused by, is this a formal policy that we have to adhere to, or is this just a, we'll make a best effort attempt?
Mayor, Councilman Whitaker, I think that would be something, we'd certainly be open to having that conversation with the council and establishing those parameters. I think we've made every attempt. I don't know, when we say we haven't met it, I'm not sure what that means, because I think we've tried to, in the last 3 years, I think we've only, in the forecast, you see that we've had to make an assumption of what we think the CPI is, and I think that's how we've tried to achieve it. So if council wants to adopt a stricter policy to establish that, we're certainly open to that conversation and how we would adopt that.
Yeah, I guess I'm just asking for clarification because we've heard that it's capped at CPI, but as I look back at the numbers, looks like last year we met CPI, we only transferred 2.5%. CPI was 2.7, but every year prior to that, the transfer was 4.2 in 17, CPI was 1.6. 15, 16, the transfer was 4.1, 1.2%. I mean, so nowhere am I seeing in this data that we've capped this at CPI.
Now, Candace, maybe you want to respond to that?
Mayor and Councilmember Whitaker, yes, as we look back over the transfer from the enterprise fund to the general fund, back during the recession, we did freeze it at a particular level. We did do 1 year that was a catch-up year, catching up 3 or 4 years of CPI, all in 1 year. That would show a larger increase. That was back in fiscal year 13-14. In fiscal year 14-15, while we did set it, we did not set it quite at CPI. We set it at 3% to go up. However, during that year, we also had market salary adjustments that were requested and approved by council at that time for our public safety, both police and fire. And so as we start to talk about how this is really a public safety contribution, this was a one-time adjustment in fiscal year 14-15 to accommodate that benchmark salary study for those public safety officers. So that was a combination of a 3% increase, which was the kind of static. We hadn't quite set it to CPI. We were trying to find the happy medium at that time. Also with council direction to do a slight increase in the contribution in order to cover public safety. That public safety had an impact over 3 years. That's where you see the 14-15, 15-16, and 16-17. When we do salary adjustments, what that does is that makes people, as we say, they're topped out in their salary. When they're no longer topped out, they're eligible for step increases. Those step increases sometimes go over a couple of years, depending on how much the salary was adjusted. I believe during that year, those adjustments between 10 and 15%, that would be a 2 to 3 year impact. So you can see that over 2 to 3 years. That's going to account for the fiscal year 14-15 through fiscal year 16-17 public safety contribution from the enterprise fund. And then you'll see in 17-18, the increase was only 2.5. That's when we actually tied it to the Western CPI. And you'll see they'll vary a little bit each year. Again, because the Western CPI is an estimate at the time that we set the budget. So the CPI could come in a little bit higher, could come in a little bit lower. It has actually come in higher over the last couple of years, which means in theory, we're actually falling behind a little bit on keeping up with CPI. But we haven't made those adjustments. We've only transferred exactly what we had estimated in the budget at the time. So for fiscal year 17-18, it was estimated a 2.5% increase. CPI actually came in at 2.7. And in 18-19, we only had 1.8% in the budget, and we are now coming in that CPI is actually 2.9%. So we're actually 1% lower than the Western CPI for this current fiscal year, but we will still only transfer what was budgeted originally.
But Mayor and Councilman, we're open, if there's a better method, a more stricter discipline on that, we would be open to having that, exploring those options.
Yeah, all I'm trying to determine, we've heard that we have this policy to cap the transfer at CPI, and I'm just trying to understand if we've stayed within our means. And out of the last 6 years, and correct me if I'm wrong, we've only met that 2 out of the last 6 years, right? So every other year we've exceeded CPI.
So Mayor and Councilmember Whitaker, the staff recommendation has been at the beginning was at 3%, and then beginning was at CPI. It was council direction that we wanted to make sure that we were paying our officers and our firefighters at market rates. And so it was council direction that we changed the fiscal year 14-15 contribution rate from the enterprise fund to the general fund.
Yeah, I'm just looking for a summary. So, out of the last 6 years, how many years did we stay under CPI?
And I don't think the policy was put in place that long ago, so.
No, it was the Mayor and Councilmember Whitaker. Again, the policy, when we say the policy was put in place as a post-recession, how do we want to deal with this going forward? So as a post-recession policy from staff, the staff recommendation was, we originally said, let's set it at 3% so that we have stability over time. And then we really said, well, not 3%, let's, working with our bond rating agencies, they wanted us to actually benchmark it back to something. We said, well, we'll benchmark it back to the Western CPI, which is what we normally use for our expenditure side when we're doing projections.
In which year did we do that?
I'm sorry?
What year did we do that?
That should have been in fiscal year either 16-17 or 17-18. It's hard for me to see because in 16-17, again, we have that third year of the impact of the market salary study. So it would be one of those 2 years, either 16-17 or 17-18, that we went with Western CPI rather than the 3%.
Okay, so it's just been a policy for the last year, essentially, so given this fiscal year isn't actually finished yet, right? So we're saying this has been a policy for 1 year?
The policy has been since the recession to make sure we stabilize the contribution from the enterprise fund to the general fund.
The recession,
That was the first.
2008?
Correct.
Okay.
That is correct. So in 2008-9, we actually froze the contribution. That was step one. Step one was to freeze the contribution until we see how deep the recession was, what the recovery would look like, and how long that recovery would take. When we did start to see that we were starting to come out of the recovery, during the recession, we had a lot of vacant homes that was decreasing our utility revenues, and so that's why we froze it. Coming out of the recession, we started to see those homes starting to fill up again, started to see the accounts starting to be active, revenue starting to come up. We were coming out of the recession. At that time, the discussion was, let's set this at a stable so that the utilities know exactly each year what the contribution will be into the general fund. We used the base amount that we had frozen it at, which is what we were operating on as a city. We did one catch-up year to catch up with Western CPI, so That would be in fiscal year 14-15, I'm sorry, in fiscal year 13-14 was our catch-up year. So if you take what we started, where we froze it, to where we contributed in 13-14, that would follow Western CPI. So that one does follow it right up to that point. At that point, we set it at about a 3%, just as we were talking about what should that stability be. At the same time, council direction was to increase the salaries for our police and fire who had been frozen for a while. And it was through that contribution from the enterprise fund that allowed us to be able to do that. That skews the numbers that you see in 13-14, 14-15, 15-16, and 16-17, because it was a 3-year impact. It was a $4.5 million impact to fiscal year 14-15 with residual impacts the next 2 years. So it's hard to see in those 3 years that we did stabilize them. They were slightly, again, we were only at a 3% until we really kind of said, really, that's when we said we really need to bring it to a Western CPI so we can benchmark it, makes it more easily to explain to other people. But we did stabilize it. So it has been stabilized since 8-9, with a couple years in there that we were at 3% rather than Western CPI.
Okay.
And Mayor and Council, let me summarize the ratings reports, because oftentimes the rating agencies identify strengths and weaknesses, and we were just talking about one of the weaknesses. But let me share with you in that same report, the utility report from S&P, the second line or the second paragraph, one sentence that summarizes their rating rationale. They said the ratings reflect, in our opinion, the system's extremely strong enterprise risk profile and strong financial risk profile. So sure, they're going to find weaknesses and opportunities to improve, and they're going to find strengths. But that one sentence tells you how their rating reflects their view on City of Mesa.
You're right, I'm just asking for clarification on some of the weaknesses that we can work on improving it. And obviously, we're a monopoly, so like any utility, we're always going to enjoy a high rating. There's zero competition, right? We can just raise rates at will. Effectively. So I mean,
Well, there are other utilities that don't have ratings like this, so I don't know that that's the case.
The utilities historically are one of the most safest investments you can possibly make, right? So.
Well, I don't think every utility company has AA ratings. That's why there is ratings, right? So that that might be interesting to compare our utility to. Well, let's ask the question. How many utilities across the country are the high investment grade, and how many are middle grade? Is this how unique is it that we have this type of a bond rating for our utility?
Mr. Mayor, members of the council, we can provide that information to you because the staff asks for that periodically as well. Like, how does Mesa stack up against others similarly rated? Let us follow up with you on that and get back to you.
Appreciate it. Yeah, I spent some time looking at the report as well, and I think it is fair to say that's a very thick report, and it's generally very glowing. If you look, you can highlight a word or a sentence within a paragraph, that raises weaknesses or concerns. I'm sure if you're looking at the City of Mesa and evaluating its financial status, you would like to see a primary property tax. You would like to see a food tax. You would like to see lower PSPRS liability. So those are things you can talk about and say, that would be nice. But on the other hand, here's pages after page after page of things that we want to complement. And so the net result of that is we're going to upgrade your bond rating. So I think it is appropriate to express appreciation and congratulations to city staff for this significant step up. And you don't have to look very far to see the impact. We were expecting a $12 million savings. We got a $17 million savings. We're expecting to pay much higher rates on this bond issuance. So tens of millions of dollars of economic benefit have resulted from this upgrade in our utility rating, our bond rating rather. So congratulations to city staff on working on this over multiple years to get us to this point.
I got one other question, John. You brought up the pension system, and one of the other things that they had mentioned was, and I'll just quote from the report, in our opinion, a further credit weakness is Mesa's large pension and other post-employment benefit obligation. without a plan in place that we think will sufficiently address it. But I mean, I thought we had a plan, right? I thought we were paying this down in 25 years. So what is it that they're referencing when they say that we don't have a plan?
Mayor, Councilmember Whitaker, I'm not sure where they're coming from. We did express and explain our plan to them, and so I'm not necessarily sure, and I could follow up with them to find out what they meant by that.
Sure, thanks, Mike.
Mr. Freeman, do you have any questions on this topic?
I do, Mayor. Can you hear me okay?
Yes.
Question, Mike. What is the length of the bonds that we are buying? And then do we take steps to defease the bonds or before their lifespan?
Yes, Mayor, Councilmember Freeman, when we sell new money bonds, we typically sell between 20 and 25 a year, the length of the bonds. When we issue refunding bonds, we don't go past the bond that is being refunded. We don't go past that maturity. So we stick to that, the same timeline for that. And we do defease every year. We're receiving impact fees that are restricted to pay down utility debt. And so we are defeasing bonds, utility revenue bonds as well. The last several years we've done that. And we haven't shown, we didn't show.
Thank you.
Thank you.
Thank you very much. Council, any additional comments on this item? Thank you, gentlemen, and congratulations again. The next item on our agenda for this meeting is item 1C. That's to hear a presentation and provide direction on the impact of the proposed city charter amendment in the initiative application filed with the city. I won't go into all the numbers. What the impact is on the general fund expenditures and the fiscal year 2021 general fund budget. Thank you, Mr. Kennington, for sticking around, and Kelly, good to have you join us.
Great to see you again, Mayor and council members. With me now is Kelly Gregan, Assistant City Attorney here at the City of Mesa. Today we've been asked to present our initial estimate or assessment of the potential impact of an initiative application, a proposed initiative application. And with that, Kelly's going to kick us off.
Okay, good morning, Mayor and Council. Let me begin with that the way an initiative starts in the state of Arizona is it's the method by which voters may propose new laws or amend existing laws by gathering signatures from registered voters to place an issue on the ballot. The City of Mesa has received an application for an initiative. The information is on that particular screen. It was submitted on May 8th, 2019, so approximately 2 weeks ago. Upon receiving it, the city clerk's office provides it with a serial number. So the serial number that you see at the top there is IN 2020-02. That's the proposed initiative that we'll talk about today. The proposed initiative would create a new Section 614 of the Mesa City Charter. Article 6 of the City Charter currently covers finance and taxation. At the bottom of that slide, you'll see what is considered the 100-word or less summary that's provided when an initiative application is submitted. It is required to give a summary of the principal provisions of the initiative. And if we look at it, it basically has 4 principal provisions. It limits the amount of utility service revenue that can be used for general fund purposes. It limits the general fund transfers at 20% of gross utility service revenue, creates a utility account, and it provides a mechanism for returning excess utility service revenue. Now, before we get too far into the impact of the proposed initiative, since a lawyer has been asked to speak, I have to cite a state statute, otherwise I would not be doing my job for you this morning. So ARS 9-500.14 is one we need to talk about today. And just in brief, it means a city or town shall not spend or use its resources for the purpose of influencing the outcome of elections. This statute, the clock, for lack of a better term on this statute, begins upon the filing of the application. And it applies to a thing of value that the city could utilize. So that's what a resource is defined as. And I know that Jim wanted to speak a little bit about this one this morning.
All right. Mayor and Council, if I could, both the statute and the AG opinion, we have words there. Sometimes it's difficult to take those and then put them in actual application. So let me give you maybe some general guidelines for today. For you, it's for staff, it's for anybody that pulls a blue card that comes up and speaks. That is, this is not a debate regarding the initiative. This is an initial assessment. So do not state whether you support or oppose the initiative. Do not make statements that are clearly supportive or pejorative of the initiative such that it evidences support or opposition to the initiative. You can ask about and discuss the impacts of the initiative in a neutral manner. You can provide direction on how to move forward based on the initiative's potential impacts too, as discussed today. But I just emphasize that it needs to be done in a neutral manner, and this is an initial assessment. Obviously, it was just filed within the few weeks, so as we move forward. Thanks, Kelly.
I have a question, Jim, if we may.
Yes.
What are the repercussions if this is violated?
I don't remember the penalties, the exact penalties under the state statute. If you want, I can pull it up here in a few minutes, but there's multiple penalties under the state statute.
Sure, thanks.
So with that caveat, let's go ahead and go forward with what we think is the initial impact of this initiative. So the initiative itself creates Section 614, which it divides into 3 sections, A, B, and C. A deals with rates and finances. That's how it's titled in the actual language. And a copy of that initiative language was attached to the agenda item so everyone can see it. B talks about the use of the public utilities revenues. And C is what we're going to talk about this morning, which is the use of the utility monies. As you can see, there are 10 items that are listed on this slide. This is a summary. It provides information about what this particular initiative would do in terms of adding language to the charter that limits the use of utility revenues. The only one of the 10 that is listed there that actually puts some sort of cap or a maximum is number 9, which is the one we're going to talk about this morning. And the language verbatim is listed out there, but I'll go ahead and read it for everyone. But it states that for each fiscal year, council may, in its discretion, deposit or transfer to the city's general fund an amount not to exceed 20% of the gross revenues generated from the city's provision of utility services during such fiscal year, as determined through a financial report audited by an independent accounting firm. So based on that language, Mike's going to give some information to the council.
Yeah, so when we wanted to calculate our initial assessment, we went to our most recent financial statements that has been audited by an independent accounting firm. So we looked at the 17-18 CAFR to find the utility revenues, and that we came up with approximately $362 million. As Kelly mentioned, the proposed initiative limits are up to the 20% limit on that transfer from the enterprise fund to the general fund. If you take 20% of that 362, the max would be approximately $72 million as far as the transfer, the contribution from the enterprise fund to the general fund. So what does that mean? How does that compare to what we're talking about in the budget? So this next slide, we're showing in the 1920 budget, we are proposing a contribution from the enterprise to the general fund of approximately $111 million. Compare that to the maximum of $72 million that the proposed initiative would have. It creates a contribution shortfall of approximately $38 million. Now, the other uses that were listed on the slide that Kelly mentioned, there are 2 things that we talked about that today in the proposed budget would receive support from the utility revenues. Those are listed below the $38 million. Those are the convention center and the spring training facilities, these enterprise programs, and also the economic investment fund projects. Again, in the 1920 budget, those are the amounts we have proposed to receive support from the utility revenues. So if the utility revenues weren't able to support those, the impact, potential impact on those would be approximately $52 million. The next slide, we wanted to show kind of how that looks overall in a graphic sense, in a graphical image. Yeah.
If I may.
Yes.
So there's an issue with your data here, and it's inaccurate. What you've done is you've taken your audited financials from 17-18 to determine the utility. One more slide forward, please.
Yeah.
Sorry, one more. Back to the pie chart.
Oh.
So you've taken your audited financials to determine the total source of utility revenue, and from 17-18, and you're comparing it to your tentative budget from 19-20. But you can't compare these 2 numbers because your budget has grown by 10% over the last 2 fiscal years. So if you reverse your tentative budget and compare the utility revenues to the budget from 17-18, your funding gap of 11% is completely eliminated because your budget has in fact grown by 11.25% over the last 2 years.
Thank you, Councilmember Whitaker. That's a great question. And I had that same question. The language in the proposed initiative was confusing in such that it requires you to limit the transfer based on a financial report that has been audited by an accounting firm, right? we don't issue an audited financial statement until 6 months after the year end. And so the question becomes, and this may be up for discussion in the future, is how do we operationally, how would we make this work to calculate that, that transfer amount based on financial statements that have been audited by an independent accounting firm? That's something we could work out and discuss.
So Mayor and Council, if I can add, I'll just read it. It's in paragraph C9 that Mike is referring to, and it says the general fund transfer, the last phrase, as determined through a financial report audited by an independent accounting firm. That's what he's referring to, is that phrasing within it.
Yeah, so that's my initial assessment. I used the latest financial report that was independently audited. And for planning purposes, put that to the 1920 budget. But you're correct, there is a question there on how that would work going forward.
Yeah, but you still can't compare the two. They're incomparable.
Well, and that's, Mayor and Council, I think that's our dilemma, is that because of the way that this is written, we have to use audited numbers. We're not going to go and wait until this year's audited and then figure out whether we hit the mark or not. That's not good financial policy because of the consequences that if we overstate, then there has to be some kind of reimbursement. We don't think that's a very feasible way to do it. So what we assumed is we would have to take the most recent audited numbers based on the way this read, as the audited numbers become established the benchmark off of the percentage. So we went to, well, we have to find the most recently audited numbers, and that's what we've used. We don't know what the audited numbers are for the year we're in today, or even projecting for the budget number for next year. I mean, things change. So to try to use an audited number to set a number that's going to be a cap that results, frankly, in penalties or some kind of consequence of returning dollars, or even missing the mark and being short on the transfer, it's a risk that we were concerned about. So for the purposes of this analysis, we said, well, we're going to take the most recent audited numbers we have are the numbers we used in this impact. And it's just not clear or giving us the opportunity to say what the audited numbers are going to be in the current year, fiscal year, or even in the next fiscal year in which we're establishing the budget. It creates a tremendous amount of uncertainty, and that's why we would probably, as a practice, recommend using the most audited numbers. That way we're in a safe place when we establish the percentage.
So this is a very common ordinance that's been implemented in multiple municipalities throughout the United States. So, I mean, as a quick example, if you want to see how it works, you can go to Long Beach, you can go to LA Water and Power. This isn't language that was created from scratch. It's actually extremely common. So perhaps we could just reach out to the municipalities and see how they handle it. And I'll go back to my previous point. You cannot compare utility revenues from 2017-18 to a budget from 2019 and 2020. The budget has grown by 5% over the last, on average, 5% the last two. The budget is 10% bigger in 1920 than it was in 17-18. So when you come and you give a presentation that says, well, you're gonna have to make all these cuts, that's completely inaccurate because you have to roll back the budget 2 years. And if the budget's inflated by 11.25%, you have to go back to numbers from 2 years previous for comparison's sake.
I wish that it was more clear in this. It doesn't, I think we conferred with the attorneys. It was not clear in the language here.
So I kind of get what we're talking about here, but to me, it seems like it might actually understate the impact because what we're doing, we're using actual numbers from a year or so ago, saying here's what, if we had capped the contribution at 20%, here's what the number would have been, and that's an actual number from a previous budget year. Now we have to project what that would be on next year, when in fact, it's given the state of the economy, yes, the budget is going to be bigger. So I think we're using a smaller number from an actual year a year ago and taking it out of what we should all understand is going to be a bigger number. The impact of that is that it actually understates the amount of money that's being cut out. If we could go ahead a year and then use retroactive numbers, it would be, in my understanding, higher than what we're talking about. So I think we all need to understand we're projecting next year, we're using hard numbers from last year. That's out in the open. everybody can understand and calculate in their own mind whether they think next year is going to be better than last year, and so on. But I would guess that we're using a smaller number, actually, than a larger number.
And let me remind Mayor and Council member, these are just using the latest data. It's going to obviously change for the proposed initiative in the future. We're going to have different numbers. We're going to have different budget numbers, different CAFR numbers. So this is just illustrative purposes for our initial impact. So
If we wanted to use actual numbers, we could just say historically, here's what it would have been last year,
yeah,
right? I mean, if we'd capped it at 20 and apply it, old numbers to old numbers.
That's exactly right. I
Right.
completely agree with you, and that's exactly how we should do it.
So we could do that, and I think doing it this way, in my mind, actually understates what the impact would be.
The utility fund revenues grow year over year at 5.21% over the last 2 years. The budget grew by 11.25% over the last 2 years. You cannot take utility revenues from 2 years, that are 2 years old, and compare them to your current budget. I mean, the numbers are incomparable. You have to go back and take the budget numbers from 17, 18 and compare those to the language. It's not a fair comparison.
And I think that.
And the only thing we were concerned about is that we were trying to avoid the consequences if we overstate, right? Because there are consequences have here about using reimbursing or doing, and we were just trying to imagine, we didn't ever want to be in that position. So when we saw audited numbers, I mean, what it's saying then, if we use the scenario going forward, we're not going to know what the real number should be 6 months until after that year's been closed out. And so it just creates kind of this uncertainty in the budgeting process and the operations process for the year, and then not knowing what the transfer should have been 6 months after the close of that fiscal year, because that's when you finally get the audited numbers for that fiscal year. So that's our dilemma, is so which do we, wait until the year's closed 6 months later and then go, oh, the transfer should have been or was this, and that's the comparison. That's our dilemma in here. We're glad to figure out a better process, but the dilemma of trying to use this year's numbers is the audit doesn't get completed until, the council doesn't accept it until January. That's 6 months after the close of the year, and then we're saying, oh, this is what the transfer should have been during the prior 18 months.
So
That's a difficult
We're talking
situation.
about two separate things. We're talking about operational implementation and the difficulties of how you would possibly implement this, one. And in this presentation, we're talking about a historical comparison because we're about to get into all these charts about how there's a funding gap and how we're short and we're gonna have to cut all these programs. But it's inaccurate. You can go back and look at things historically to see exactly what your utility revenues were 2 years ago and exactly what your budget was 2 years ago. And then you can make the determination on what your funding gaps were or where you would have to make cuts. That's a fair comparison. To take your budget, which has been inflated by 11.25% to account for inflation growth over the last 2 years, and then take your utility numbers that are 2 years old, you can't compare those two numbers. There's no comparison. It's not a fair comparison. So we're going to go through this entire graph and talk about hypotheticals that are completely false and misleading.
Well, I think the numbers are real for 2 years ago. So the number that I think we arrive at is a real number 2 years, as it would have been applied to our budget 2 years ago. But I think the challenge that hypothetically, if this initiative were to pass, the question is what would the impact be? And so a year from now, when we're trying to figure out how we budget with the impact of this happening hypothetically, what is city staff going to be able to do? They're going to have to say, we're going to have to estimate what our enterprise funds are, what the revenue is going to be, so that we can figure out what the cap ought to be, so that we know how much we can move over to public safety and the other things. So we're going to have to engage in this type of speculative accounting.
We do that every year. It's called a budget, right?
Right, and so that's the question.
If it was based off of budget for that year, it would be a lot easier to calculate. But when it's based off an audited number, audited numbers do not match up with the budget year. They're 6 months trailing the budget. And so that's the dilemma. So we're trying to be safe and try to find the most recently audited number. Council wants us to do an analysis based off of budget. We can, but that's not the way the initiative reads.
Jen.
What would be the dollar cut if these percentages, if this initiative was in place in the 17-18 budget.
So your question, I believe, Councilmember Duff, is what was the transfer in 17-18?
On, let's see.
We'd have to
on
go,
this-
we'd have to go
Yeah.
pull the numbers, because we have to go
Right.
back and figure out the 17-18
Can you
transfer
go back to the
was.
previous slide before this?
Well, we don't have, we don't
Next.
have the 17-18 transfer number. Do you have
Oh.
that and all the other numbers that go with it?
Transfer.
Yeah, so we don't have all the numbers.
This was 100, in fiscal year 16-17, the transfer was 103.8.
But you don't have the convention center, the spring training commitments, that, all those other things that are in there.
Okay.
But even at that, from what we do know about the budget, and I know we can't speak concretely, but we're not going to be significantly different, I think. Of course, we cannot have the discussion, but it's not going to be significantly different. We're talking,
That's completely speculative. You don't know what the difference is. It hasn't been presented.
Jeremy,
Nobody's
let's
looked at
let
it.
Jen make her comment, and then, of course, we'd give you every opportunity to
My
say what
apologies.
you want to say.
Sorry, Jen.
no, that's fine. But there would be a significant cut. I will just leave it at that.
Can we go back one slide?
Yeah.
So the $361.9 million number, what year is that from?
That's from 17-18 CAFR, the latest financial report that has been audited by an independent accounting firm.
So in that year, that is the income that was generated from utilities.
Yes.
And so if we put a 20% cap on that, for that year, the contribution could have been no more than $72.3 million.
Correct.
Okay.
Yeah, and so Mayor, just simply use, let's just use Candace's numbers. It's going to be, so that's $72.3 million. She just told us that the transfer amount was over $100 million. It's still $30 million difference, right, on the transfer. And that excludes our commitments to the spring training agreements, the convention center, and other economic development projects. So just alone, just remember, say $100 million, just use $100 million. The $103 million was the transfer, and you're only going to get 72.3 towards public safety contributions. So you've got to make up, at a minimum, $30 million. So 30 million, yeah, that's better than $50 million, but it's, we're not trying to give the precise number, we're trying to show at least relatively our investigation of what they're trying to understand the impact is. Because if you do this without making up the revenues or making cuts, there's an impact. There's an impact somewhere.
The budget grew $45 million in the last 2 years. So relative to a $30 million cut means you still have a $15 million surplus. The budget was $400 million 2 years ago. Sorry, what? Is that incorrect?
Okay, let's be clear on, I think we're getting a little off the topic,
Right.
but
So just.
the question is
I wanna just bring it
historically,
back to-
how much has the budget increased over the last year or two?
Well, I guess I don't have the 17-18 budget in front of me. I only usually do 2 years at a time. But Mayor and Councilmember Whitaker, I think what they're trying to say is that the transfer that we did in 17-18 from the enterprise fund to the general fund was $106,478,298. So it's $106.5 million is what was transferred into the general fund that supported the operations, the public safety, parks, library, and everything like that. So if you use that 17-18 number and you compare it to Mike's number of the $72 million, that would then be a revenue or resource gap to fund the items that were funded in the general fund during the fiscal year 17-18.
Okay. Mr. Luna?
What did we fund? Can you give me an idea what was funded?
The 103 million goes to public safety. It
all goes to public
Remember, well,
safety?
we showed the chart, right? We
Yeah.
show revenues coming into the city. We show the transfer to public safety. All of this goes to public safety.
That's not accurate.
And that's.
And then the rest of
It's
this,
not
the rest of the local sales tax.
The money goes in the general fund and it's commingled.
Jeremy,
It's up to the
I
sole
promise you, you're
discretion
going to
of
get
the
every
council.
opportunity to say everything you want
But
to
we
say,
can
but
make an
we
accurate
can't interrupt
statement.
people when they're in the middle of talking. So please write it down and say it as soon as these gentlemen are
And then, Mayor and Council, while I do not have it with me today, out on our website are all of the pie charts that were included with the tentative budget that you adopted on Monday night shows the total resources for the budget and also shows the general governmental. The general governmental is what we're talking about. So those pie charts that show the general governmental expenditures by department We have those charts for the last 5 years on our website, and I will be, send you guys all a link after this so that you can see exactly what was funded in the general governmental budget during the fiscal year 17-18. And that's would be what these numbers would apply to.
So in addition to public safety, we're talking about libraries, parks, and
Libraries, parks, community
Community
services, all the
services.
support areas, the IT personnel.
It's easy, and then
HR.
if we want to just take the
Transportation.
general fund, right?
Transportation, right.
Just take the general fund. Public safety is more than 70% of the
Right.
general fund. So if you don't take 100% of it, you're going to take 70 to 75% of the impact of the general fund will be public safety.
So does that mean we can rename the sales tax contribution, the public safety contribution, or can we rename the intergovernmental contribution, the public safety contribution, because it's bigger than both of those items as well? Why is it that we're only choosing to rename the enterprise fund the public safety contribution fund? This is commingled money that goes into the general fund, and then it's at the sole discretion of council how it gets distributed. There's no restricted funds that gets transferred to any specific department. That's not how the process works.
No, the sales tax that was just approved by the voters does go to public safety only.
Okay, well, that's one restricted fund. I'm referring to
And the
the
quality
sales
of life
tax in
sales
general.
tax goes to public safety only.
Again, another restricted fund.
So again, Mayor and Council, the pie chart that shows all of that, that kind of summarizes it for you, again, that is correct. All of those revenues go into the general fund. Councilmember Whitaker is correct in the fact that they commingle in there. Once in the general fund, there is no restrictions. So whatever the priority of the council is, individual priorities, you can look to see what was funded. If we were to have to do reductions in that general fund budget, it would again be the council's priority to prioritize all of the expenses within there for what resources were applied to.
So it seems fair to say that trying to base absolute budgeting on a projection, and given the somewhat ambiguous language of the proposition, is problematic. This is, hypothetically, if this happens every year, we're going to be having these discussions as to what do we anticipate the utility revenue is going to be, and so that we know where to place a cap. So we're going to have to just estimate at this point. With that, and as we would have to do every year going forward were this to be successful. But here's some ballpark figures based on previous fiscal years. So having said that, why don't we proceed with the rest of this presentation, and then I'm sure we'll have plenty to say afterwards.
Thank you, Mayor, council members. So the next slide, we talk about if a funding gap, and whatever the size of that funding gap is, if there is one, which in our initial assessment there is, there would have to be three options that we have as a municipality. As a municipality, we have to balance our budget per state law. So we have three options, really. Find a new source of revenue, increase one of our current sources of revenue, or decrease our expenditures, right? This slide, we talk about the first two options. The proposed initiative, I didn't read, offers any, I didn't find any new source of revenue offered up or any increase in the current source of revenue. Just as a reminder to council, we have, the charter allows us to receive certain taxes that in order to increase those taxes, we would need voter approval for. And then as this discussion continues on, we could invest other funding sources as the council directs. The third option we talked about is the option to decrease expenditures. And over the next three slides, I show positions, new positions that aren't filled yet that are in the proposed budget, in the 1920 budget. I also show construction projects that have O&M associated with them that are expected to begin construction in the next 2 fiscal years. On this slide, we show the new positions in the general fund in the 1920 budget that aren't filled today. The public safety sales tax positions supported by the public safety sales tax, and the 2018 bond-related positions. These would be obviously for consideration by council as we continue on with this discussion of the proposed initiative. The next two slides, I list the construction, the projects, as I said before, that are expected to begin construction in the next 2 fiscal years with the related O&M with them. And finally, as we continue these discussions, we will come back to council over the next 12 months or so to develop alternative budgets in planning for a potential, this proposed initiative. We would need to develop alternate budgets for whatever we need, the needs would be at that point. With that, that is our prepared presentation, and open up for
So
discussion.
Mayor, just a quick comment on that. So we've been through cuts like this before, but it was a major recession. And it was significant, and it's very difficult because it means in the city of Mesa, the general fund is represented mostly by personnel. So 70%, probably more, but 70% are salaries, benefits, pension, all those costs, right? So if it's $30 million or whatever the reduction is, it's going to impact people, it's going to impact positions, it's going to impact programs. So what our concern is that the uncertainty of this and knowing when that's going to happen, or if this is going to happen, it creates a tremendous amount of difficulty in moving forward with new programs, because most likely those new programs and the hiring of those individuals that have been approved by the council, or even open positions today, filling those in this fall, and recognizing that our policy states that when we do a reduction in workforce, the individuals that came in last are the first ones to go. And it's going to be difficult to look at somebody in the eye and offer them a job with the possibility, and they'll know, suspect, that within a year, we may be having to lay them off. So that's very, very difficult for us. So we're going to look at just the possibility, not on public safety. I think public safety we can move forward with because we have the ability that as those classes come up, we can make adjustments in the classes later on. So the idea is let's move forward with public safety. What it does affect, though, is, as we move forward with these facility improvements, the CIP, certainly in a lot of them, we're still in the land acquisition phase and design. But we'll think as each project comes forward before we go to construct or open up those projects that are going to have a significant operational impact on the city, I think we'll have to assess that, because adding additional O&M cost in a time when we're going to be making cuts seems a little out of sync. But we have some time, but we'll be looking at, I'm assuming, we can talk about the possible coming back at some point and coming with alternate budgets, about talking with council about the priority of where these reductions would take place across the city.
Thank you, Mr. Brady. We do have one blue card, and so I know, Mr. Gitrich, I'm going to invite you up. I know that I asked the city attorney to speak with you just so that you understand the parameters that we're all functioning under here, where we can't advocate or attack this proposal, but we can ask questions that ask about the impact. So having received that, council, please proceed.
All right, thank you, Mr. Mayor and City Council, for listening to me. My greatest concern is not so much for the general fund, it is for the ratepayers. How will this impact the ratepayers? I know that I'm concerned. My utilities rates have increased since I've been here, which is almost 20 years, about double now, and this is my biggest concern.
Okay, thank you very much. We appreciate that. Go ahead and have a seat. So the question has been raised, can we, does this initiative mandate or require a reduction in utility rates?
Mayor and council, maybe if I could ask you to go to slide 4, and maybe because I'd like to put it in context and how it works. How the initiative works is that it doesn't create any minimums or maximums on 1 through 8, as you see on that list, or 10 on that list on how council can spend money. It only puts a cap or a maximum on number 9 on the general fund transfer. So there's no minimum or maximum number that the city council in the future will have to expend on any of those numbers except for 9, the cap, which I just gave that caveat. And so the future city council will be able to expend the money in any of those categories, in any of those manners, subject to the cap in number 9. And so number 10 involves the possibility of reimbursement or reduction in rates. So that's where you see that aspect of it within number 10. But what future councils will do is speculation, and there's no minimum or maximums, as I said, through all the numbers except for number 9. So I can't really answer the question because it's a future council action as how future funds will be expended.
Right, that is, I guess my question is different than that. Is there any, and I'm trying to paraphrase Mr. Gittrich's question, is there any language in the initiative that says council needs to reduce any type of utility rate?
No, I apologize, Mayor. No, that doesn't require utility rate reduction. It simply puts, it only creates a cap on number 9 and then creates the categories in which the money can be spent.
The cap that's imposed is on the amount that can be transferred from the utility funds to the general fund.
That's the only cap there.
There's no cap on what utility rates would be.
There's no cap on the rates.
Thank you.
There's general language. I'll say there's general language. It's not a cap. I don't view it as a cap, but I'll use the words. It's actually in section A. It says all rates shall be just and reasonable. I don't view that as a cap. In fact, that language is mimicked in state statute, and so that actually already exists currently in state statute, and so I don't consider that as cap. But in case someone views that as somehow as a cap, I'll just point that out just to be for full disclosure.
Thank you.
Jeremy. For clarification, Jim, section 10 says surplus amounts at the end of each fiscal year, all amounts remaining in the utility fund not paid or otherwise allocated for obligations or reserves authorized under items 1 through 9 shall be reimbursed to the city public utility customers through a reimbursement or reduction in utility rates that corresponds proportionately to the amount of overpayment by each class of customers. Are you indicating that that is unenforceable, or I'm trying to understand where we're not? My understanding was from the attorney that that was specifically written so that excess revenues would in fact be returned to the ratepayer.
So like I said, there's other than 9, there's no minimum or maximum on all the other numbers. So all the if all the money, I'll just by way of example, and I won't pick a number because I don't want to create some. If all the funds are used, council directs all the money to be spent on any set of the numbers above 10, then there wouldn't be anything that falls to 10, and so then there wouldn't be there wouldn't be anything within number 10 for surplus. And so council would decide that in the future. That's why I pointed out that there's no minimum or maximum except as to number 9.
Right, but all of the items 1 through 8 effectively lead to long-term reduction of utility rates, right? Paying down debt.
So Mayor, I'm gonna just, I'm not gonna engage in advocacy. I'm not gonna engage in advocacy or answer advocacy type of questions.
Right.
The amendment was written in a way that excess revenues were to be returned to the city utility ratepayers. I mean, so if future councils, obviously, we can't dictate what they do, but if they choose not to do that, then, I guess that we can never speculate what future councils would do, I suppose.
I think the question is, what's the impact on rates? So hypothetically, if this passes, and if at the end of the year, the utility budget, there is a surplus in that account, this creates a separate account for utility revenues, and if the revenues exceed the expenditures, we had a good year in the utility account, then yes, this initiative would mandate that those funds be returned to the ratepayers. But there is no language in this that says we need to adjust rates downward or upward.
So, Mayor and Council, this is an interesting conversation, but I really like the council to be focused on what we're going to do with the $30 to $50 million gap. I think that's the challenge we have before us.
So, Mr. Gittrich, we've attempted to respond to your question and take from it what you will. Other questions or comments, council? All right.
Real quick.
Yes.
Yeah, so remind me again, how much is the public safety percentage of our budget in the general fund?
So right now, if you just include the departments, right, I think the pie chart we showed you was somewhere close to 70%. But what that doesn't include is what all the support services for public safety, whether it's fleet, HR, purchasing, city attorney. So it gets bigger than that, right? But that's just, if you just took what's budgeted in those departments, it's very close to 70%.
So in the just reality terms, the transfer, even though it's commingled in the general fund, we take 75%, let's say, of the whole budget's public safety. Public safety will be impacted severely with the cuts that are being made, right? Unless, because we would want to even out those cuts, if we're not, eliminating libraries or others, public safety eventually, if it's 75% of the budget, they will be a major part of that reduction.
So I'll just give you an example. When we had to make the cuts during the recession, they weren't proportional. We didn't, even though public safety was 70%, we tried to impact them less, but it was still was significant. But of course, we reduced library hours, we closed park facilities and laid off. So yeah, it will be, just like you said, I mean, it's, they're 70% of a budget, so when you're making a cut of that size, that's typically, there will be some impact to all departments.
To all departments.
Yeah.
And Mayor and Council and City Manager, I just wanted to, for the 1920 proposed budget, it's actually about 60% is the direct, so it's 59.8% of the general governmental funds are direct against those particular departments. But again, it does not include, so it's probably more like the 70% when you include everything else in there. So it's 60% of just their direct departments. There's a lot of life cycle items, replacement of vehicles is not in their departments, those are centralized. There's a lot of breathing apparatus for fire that's centralized, is not in their department. So the large items are not usually in their operating department. So from operating perspective, it's about 60% of the operating. That does not include capital expenditures.
Thank you. Mr. Luna.
Mr. Brady, I had a question on the Northeast Public Safety Facility. It's $3.5 million. That's a project that was a voter-approved bond. What would be the impact in terms of providing personnel to operate that facility?
I think that's the number. That's the right now, we're estimating that to be, and I don't know if that's a partial year count, is the $3.5 million, is that a full year?
It should be the full year.
So it's $3.5 million operational costs for that facility.
So would there be an impact if there's a reduction in terms of?
Yeah, I think a lot of these, we would have to consider that, right? Before we add new facilities with additional operating costs, while at the same time, we're trying to find ways to reduce the budget. Unfortunately, sometimes the new facilities become the first ones on the list because we haven't occupied them yet. So that's something we'll have to have a conversation about with the council. We'll proceed with hiring of police and fire as we have scheduled now. We will acquire the property for these facilities, some of which we already have. But before we start construction and make the determination we're going to be committed to the operations and maintenance, I think we need to come back to council and have that discussion about the alternative reduced budget for that year or for that going forward.
Thank you. Other questions or comments?
Yeah, I just want to point
Jeremy.
out, we can't speculate what future councils will do with their budget, and we can't tie their hands either. So to say one specific issue would be cut, it's not accurate. We can't determine what future councils are going to do. And I just want to point out one last thing. I introduced this ordinance last year on June 28th, and the city failed to recognize my introduction of this ordinance. So today, here we are with the initiative that's been put together with my team. I continue to talk to the mayor about what cap is appropriate. I think we've had good conversations and trying to determine what is a sustainable cap, right? And in good faith, my team will continue to have those conversations, and hopefully we can figure something else out before this becomes a ballot initiative, and all of this will be a moot point.
Well, and I appreciate that. I have appreciated our good faith conversations on this, and I hope I'm sure they will continue. And I think all of us want to avoid a scenario where we have unintended negative consequences, particularly that might have spill into the public safety that our citizens are expecting. So thank you for that. We'll continue to talk. I do have some observations and just observations. Again, I think it's important that we note out that the language does not mandate any lowering of utility rates, from my study of this. I don't see any language that mandates reinvestment in the utility infrastructure. There is no exclusion, and correct me if I'm wrong, in the language of this initiative that would hold harmless or protect the impacts to public safety that I think we all want to avoid. And there is an honest disagreement over what the dollar figure is on what the impact would be. As I have reviewed the website of those who are proposing this, I think the number was 43 million. Staff here today was mentioning something closer to 50 million. So I don't know what that number is, but I would say it's in that ballpark of those two numbers. I think if we were to apply a reduction of that type to our budget, there's no way when 70% of our budget is personnel, 70% of our budget is public safety, that you won't see impacts in personnel, including public safety personnel. So for that reason, I mean, I see the numbers that on this slide, but frankly, it's just a handful of millions of dollars. It's not in the neighborhood of what the actual impact would be. So above and beyond the suggestions at the end of this slide, I think the cuts would be far more significant. So for that reason, Mr. Brady, I would suggest that I remain committed to honoring the instructions of our voters in the last election. I don't want to cower and and back away from what our community is expecting us to do. So I will continue to be an advocate that we do proceed with constructing the public safety facilities that we've promised our voters. We do proceed with hiring the public safety personnel that we promised our voters. If hypothetically, a year or so from now, we have to lay people off, then we'll do everything we can to address that appropriately. But I'm committed to proceeding with what our current plans are. But I do think it's important on future council agendas that we do have a robust discussion on what is the health of our public safety, of our infrastructure. That is an issue that has been used as a rationale for this initiative, so I think we need to have good information on that. Also, I think it is important that we have good information and we study what the relative cost of living is in the city of Mesa compared to our peers, taking account everything, the lack of a food tax, the lack of a primary property tax, so that we can have an apples-to-apples comparison so that people can then make decisions based on good information.
And Mayor, it sounds like it may be a worthwhile conversation for council, have a real conversation about the restrictions on the transfer and what they should be and what they should be going forward. I think that's a fair conversation, and how we adopt that so that it's maybe more strict and it has more opportunity for the council to be aware of those impacts to the enterprise fund.
I agree.
I could comment, I would love to see the proposal from council to put this on the ballot as our own initiative, right? Maybe we write this up, you look at the sustainability of the utilities and you decide what the cap is. I'll remind everybody here that this council has the ability to create their own ballot measure and put it on the ballot. So, you know, if we're serious about doing this, then maybe we should have that conversation about what our council ballot measure looks like, so that we can in fact restrict those transfers from the utility fund over to the general fund. But you know, as it sits today, like I said, this was introduced a year ago, and it's all in good faith. We talk about how we have this CPI capped adjustment from the utilities over to the general fund, and it's just not accurate. You can go back and look at the numbers from the last 5 fiscal years, and in one instance did we maintain under CPI. And I'll go back to talk about what the bond rating agencies said, is that we lack transparency in the sense that we have no accounting metric. The reason why this is so confusing is because we've commingled funds from multiple enterprises into our utilities. Now, if we created an accounting metric that would allow us to analyze our utilities independently, which I would strongly push for, would allow us to actually see the impact that this is having on our utilities over the future. In regards to the point of the mayor, how he says, you know, well, I would like to see this initiative specifically guaranteeing public safety, or to paraphrase, I don't remember what your...
Hold harmless.
What's that?
Holding public safety harmless?
Holding public safety harmless. My understanding is, and Jim, I understand you can't engage in this, but the attorney has indicated that you can't tie the future hands of council, and if you do put restrictive language in a ballot measure like that, then it can invalidate the entire ballot measure. So there is no There is no option for that. And I would love to see a future presentation from staff on the benefits of leaving money in the enterprise fund, the benefits of paying down debt, the benefits of having a lower debt service payment for our utilities. And to be absolutely clear on the utilities, when we talk about future presentations, I'm not suggesting that the utilities today are in an unsafe place. I'm suggesting that the financial sustainability of the utilities with these massive $1 billion of investments that we have to make are not going to work into the future. It has nothing to do with where our water sits today. Do I think our water is fine today? Absolutely. But that doesn't mean that we should be short-sighted in the sense of not preparing for the future costs of our utilities. And if we can't have an honest conversation about the 5-year CIP plan, the whole purpose of the charter amendment is that.
Mayor, we're getting, just for your own sake, I'm just concerned, we're getting off the agenda item and we're on an initiative, and I'm worried that it starts to look like advocacy. Councilmember Whitaker, just for your own sake,
Fair, sir. Thank you.
And then just,
Yes.
Mayor, if I could just clarify one point that Councilmember Whitaker mentioned about the utility fund. We do actually have separate accounting for each utility within the enterprise fund. There is an overall enterprise fund, and we talk about managing the enterprise fund as a whole, but there are sub-funds, and each utility within there has separate schedules. And so we already have that accounting set up today. I just want to make sure that's clarified, that accounting exists today.
In terms of discussing future agenda items as well, I mean, I think we're all under the impression that Mesa is a unicorn. That we're the only city in the world that relies on our utility accounts for things other than utilities. I suspect that's not the case. So in the future, I think it would be good for us to get an apples-to-apples comparison. I've heard anecdotally, for example, that when you look at the City of Phoenix water bill, there's a surcharge on there for public safety. So city services. So I think, we ought to ask ourselves the question at some point, does Mesa need some sort of reform because we're uniquely different than the rest of the world in the way that we pay for our services? That'll be an interesting question. I'm sorry, Jen, and then Jeremy.
I just wanted to bring up one thing about our enterprise, on slide 7. You don't have to bring it up, but talking about the convention centers, spring training facilities, and economic investment projects, and what those shortfalls are. Looking at our sales tax and bed tax revenues during, especially the spring training facilities, I'll bring out. Those months that we have the spring training, the sales tax and bed tax revenues are significantly larger than the shortfall. So I just wanted to point out, although we invest in these facilities for economic return, and we do have economic return. Now, I can't say directly that this purchase on sales tax is attributed directly to someone attending that training facilities, but it can be assumed, since in the month of March we're as big or larger than in December, and we can see those tremendous influxes then. So there is an offset, I see, in my opinion, of some of these economic investments where we're bringing in money, and those dollars, if we're assuming they are attributed to the spring training facilities, are the majority of those are tourist dollars. They're not from our residents. Also, in looking at whatever cuts we need to make beyond public safety, which is ultimately important, there are some quality of life expenses in our arts and culture and libraries and transit and a number of things. And so if we don't want to lose those, have those cut out, then we would have to look at other revenue sources, and that would be a primary property tax or a sales tax increase or however, and I realize that would need to be voted upon the residents, but that would be upon the residents to live with less quality of life or to incur an additional cost through those means. And then if there is assuming residents don't want to lose quality of life amenities, then we would need to take those additional costs and put it back into what it costs to live in Mesa. So we would have maybe, perhaps, it's a possibility, reduced utilities, but maybe increase in here and what our total outlook is. So it's difficult to look as a resident that it's one place or another. We need to look at holistically what it costs to live in Mesa and what is the quality of our life and public safety, amenities, and our strength as a city. Thank you.
Thank you, and we're going to hear from Jeremy, but just to your point of the numbers that we're looking at right now, there's a reason these are not expenditures without revenues attached to the convention center, spring training. The reason we spend $4.8 million on the convention center and spring training is because we generate far more than that in revenue. The reason that we invest in economic investment fund projects is not to spend $8.4 million, it's to generate far more than that. So if you just look at that piece of paper, it doesn't really tell the story. Jeremy.
I just want to clarify that the majority of cities in Arizona see a bump in sales tax in March. So you could argue that has, what is the actual effect of the spring training facilities? I also compliment you, Jen. I completely agree with you. I think that quality of life is important, and I would support any of the quality of life initiatives that you'd want to put on the ballot as a secondary property tax. I think you're right. It's the right of this council, and I believe that can be done. So I agree. And the proper form of taxation is a secondary property tax for some of these projects.
A primary property tax. A secondary would be for capital improvements.
I'm just referring to specific secondary projects that you would want to put onto the ballot as individual initiatives, right? I mean, if that's what this council wants to do, like, if we wanted, let's say the ASU project is extremely successful and we want to invest another $63.5 million.
Well, I think people are anxious to draw the distinction.
It can always be a secondary property tax.
A secondary property tax can only be used for capital. So all of yes, building something we can go to the voters for, but staffing and all of the expenses other than bricks and mortar are going to have to come out of the general fund, which is another discussion.
Real
Yes.
quick, Chris, Remy, again, we have a discussion on utility rates later in the fall.
Yes.
So I look forward to that discussion because I do see the opportunity that we can lessen the burden on our residents during that time. And, at least for me, that's what I want to do and look at those options at that time, and just to make sure that, our residents know that we're doing our best to figure out the various different options that we can, lessen the burden on utility rates. And that's a discussion that I look forward in having with staff later in the fall.
Thank you, Councilman Reddy. And as we've stated before, and I think it's important, as you look forward to the budget, we are not recommending any rate increase this year. And I think when we come to that next year, we see rate increase then too. So we are trying to be very sensitive to that point and trying to balance that out. And I think we go look back as far as the actual rate of impact of utilities rates over the last 3 or 4 years, we're trying to keep it up close to where the inflationary rate is. But at least for the next year and a half, where we will not be proposing any rate increases.
Thank you. Council, any additional discussion on this item? Okay. Mr.
Mayor?
Yes, thank you. I'm sorry, Mr. Freeman. I knew you had something to
That's
say.
fine. I'm going to have to leave the conversation, but there's far more here to discuss, and I thank for everybody's time and giving the presentation. I appreciate all that's said. So thank you very much, and have a great day.
Thank you. And I think it's probably important to note that this is something that I'm sure will be actively discussed at multiple council meetings over the next year or so. So this was just a kicking off of this discussion, I guess. Thank you very much. The next item on our agenda is to hear reports on meetings and conferences attended. Council, what would you like to share with us? Jen.
Sorry about that, I didn't have the microphone. I read yesterday that the Mesa Community Court received an Innovation Award from the Arizona Supreme Court for the work they've done in turning around homeless infraction, yeah. And so I think that is quite significant. I have something else, but my head isn't caught up. Just go
Okay,
ahead.
all right. Well, while you think about that, Mr. Luna.
So yesterday, Councilmember Duff and I, as well as you, Mayor, attended the East Valley Hispanic Chamber of Commerce breakfast. It was quite informative in terms of how you run businesses, and there were a lot of banks and a lot of Latino-owned businesses, and provides a great information on how we can broaden opportunities in the city of Mesa. So it was a great event, and hopefully some of our businesses in our community take advantage of the information that was shared.
Thank you.
I just want to highlight all the graduates from our local high schools in Mesa today. So congratulations to all the high school graduates today. So thank you.
Oh, Mr. Luna, yes, but we have a celebrity amongst us as well.
Beth, I don't know if Beth Union is here. We want to start. Oh, we're gonna do a surprise. Okay. Hi.
Okay.
Okay, we're gonna do anyway. Okay, great.
Never
I'm
mind.
sorry. I think I spilled the beans.
Someone from the APWA, the American Public Works Association's Arizona chapter, isn't available until the June 17th council meeting, so.
So, speaking of things we can't talk about, Jen, thank you for noting that the community court received an award from the Arizona Supreme Court. There are other awards, rumors of other awards to that program as well that we'll talk about at the appropriate time. Speaking of graduations, I have had the privilege of attending a few in the last week or so, but none was cooler than last night when I attended the Mesa K Ready graduation for 96 four-year-olds. It was, I wish everybody could have been there. It was very, very cool. So I'm very proud of this partnership between the city and Mesa Public Schools. We do what we're already doing. I mean, we invite the kids to come to our libraries and our museums and our parks and our arts centers. And and so thank you to all the city staff that have been so active in this program. But it was really amazing to see these amazing four-year-olds walk across the stage, get a backpack, get a chance to pick a toy, and it was just very cool. And the measured improvement in these kids' ability to go to kindergarten, this was measured before, during, and after in a very professional way, and it was very dramatic, the impact that it had, not just on these kids, but on their lives and on the siblings of and their parents. So thank you for allowing me to be there last night. It was a really compelling experience. Council, anything else we'd like to discuss under this agenda item? Jen, did you remember what you were thinking about?
Last night, I attended a presentation by the Nature's Conservancy on heat mitigation and what it means in our neighborhoods. And it's quite a big discussion, and I'll be bringing it forward in quite a few departments. But just as a resident and what we do personally, if we can look at our shade, or especially our tree coverage, even at our homes, and getting that to a 30% rate, what it'll mean to our city in heat reduction and our ability to tolerate the heat even at our own homes is significant. And I would like to look at a lot of different ways that we can really make an impact as a city, but especially in our neighborhoods that need help. Thanks.
Thank you. The next, Mr. Freeman, are you still with us? I think you said you had to take off, didn't you? Okay. Mr. Brady, what does our schedule look like?
Just a reminder, we'll be meeting again next Thursday, May 30th. Thank you.
Thank you very much. Is there a motion to adjourn this meeting? Thank you. All in favor, please say aye. Aye. We are adjourned.